In 2025, managing your taxes efficiently is crucial for both individuals and businesses. It's essential to understand the available options to save money on taxes legally, as this can help you keep more of your income, invest in your future, and make your financial goals more attainable. Whether you are a freelancer, a small business owner, or an employee, there are various strategies you can employ to minimize your tax burden while remaining compliant with the law. Let's dive into practical ways to save money on taxes in 2025. The first step to saving money on taxes is knowing what deductions and credits you qualify for. These tax breaks can significantly lower your taxable income, which directly reduces the amount of tax you owe. Deductions are expenses that can be subtracted from your total income, and credits are amounts that are deducted directly from your tax bill. The more you understand about these, the better you can plan your finances to pay less in taxes. One of the most straightforward ways to save money on taxes is by maximizing contributions to tax-deferred retirement accounts. In the U.S., for example, you can contribute to a 401k or an individual retirement account, IRA, which allows you to deduct the amount you contribute from your taxable income. This means the money you put into these accounts isn't taxed until you withdraw it, which often happens in retirement when you might be in a lower tax bracket. In 2025, the contribution limits have likely increased slightly due to inflation, which means you have even more room to reduce your taxable income by contributing to retirement accounts. Another useful strategy is taking advantage of health savings accounts or flexible spending accounts, HSAs or FSAs. These are tax-advantaged accounts that allow you to save money for healthcare expenses while lowering your taxable income. Contributions to these accounts are made before taxes are applied, which means you're essentially saving money on taxes while preparing for future healthcare costs. If you're eligible, setting up an HSA or FSA can be an easy way to reduce your tax bill and ensure that you're covered for medical expenses in the future. If you are a business owner or freelancer, you can take advantage of business deductions. These can include a wide range of expenses such as office supplies, travel costs, and even the cost of your home office if you work from home. In 2025, the government continues to allow deductions for business-related expenses, which means you can lower your taxable income by deducting costs that are essential for running your business. Be sure to keep track of all your business expenses and consult a tax professional to ensure you're claiming everything you're entitled to. Another important aspect of saving money on taxes is taking advantage of tax credits. Unlike deductions, which reduce your taxable income, credits directly reduce the amount of tax you owe. There are various tax credits available, including credits for education expenses, childcare, and even for adopting a child. For example, in 2025, the child tax credit is available to parents with children under a certain age. The credit amount depends on your income level, so make sure you understand how much you can claim. You can also consider tax credits related to energy-efficient home improvements. Many governments encourage individuals to make eco-friendly changes to their homes, such as installing solar panels or upgrading insulation. In 2025, these types of improvements may continue to be eligible for tax credits, which means you can both save money on your taxes and reduce your energy costs at the same time. If you plan to make any home improvements in the near future, it's worth researching whether any of these projects will qualify for tax incentives. For those who are employed, there are still ways to reduce your tax burden. One common method is to adjust your withholding on your paycheck. Your employer typically withholds taxes based on your W-4 form, which includes information about your exemptions and deductions. If you find that too much is being withheld from your paycheck, you can submit a new W-4 form to adjust your withholding, allowing you to keep more of your earnings throughout the year. This can be a simple way to ensure that you're not overpaying taxes and that you're getting the maximum amount of your paycheck. Another strategy for employees is using pre-tax benefits offered by your employer. Many companies offer benefits like commuter reimbursements, dependent care assistance, and even gym memberships, all of which can be deducted from your income before taxes are applied. By taking advantage of these benefits, you can lower your taxable income and reduce your tax liability. In addition to these strategies, it's also wise to look for ways to invest in tax-efficient funds or assets. For example, in 2025, there are still opportunities to invest in municipal bonds, which offer tax-free interest income at the federal level. By investing in assets that generate tax-free income, you can reduce your overall taxable income and avoid paying taxes on that income. If you live in a state with high state taxes, consider relocating to a state with no state income tax. States like Florida, Texas, and Washington offer tax advantages by not imposing a state income tax, which can be a significant benefit for individuals and businesses alike. However, it's essential to carefully weigh all factors when considering a move, as there may be other expenses or lifestyle changes to consider. Another effective strategy for saving money on taxes is donating to charity. Charitable contributions are tax-deductible, which means you can lower your taxable income by donating to causes you care about. In 2025, donations to qualified organizations remain eligible for deductions, so if you're planning to give back to your community or support a cause, be sure to keep track of your donations and claim them on your taxes. Finally, it's essential to keep accurate records of all your income and expenses throughout the year. Whether you're self-employed, a small business owner, or an employee with extra deductions, maintaining detailed records will ensure that you can take full advantage of the tax-saving opportunities available to you. Consider using accounting software or working with a tax professional to keep your records organized and up to date. This will make filing your taxes much easier and help you avoid any errors that could result in overpaying or missing out on deductions. By understanding the various tax-saving strategies available in 2025, you can make more informed financial decisions that not only help you reduce your tax burden legally, but also give you the ability to allocate your money more effectively towards investments, savings, and achieving your financial goals. Tax planning is a critical component of personal and business finance, and knowing the best ways to optimize your tax situation can have a significant impact on your financial well-being. From contributing to retirement accounts, such as 401ks or IRAs, to taking full advantage of tax credits and deductions, there are a variety of strategies that can help you minimize your tax liability. These strategies differ depending on whether you're a business owner, freelancer, or employee, but all of them work toward the same goal, helping you keep more of your hard-earned money in your pocket. For business owners, maximizing allowable deductions and tax credits can directly contribute to improving cash flow and boosting profitability. For individuals, utilizing strategies like retirement account contributions, healthcare savings plans, and charitable giving can also reduce taxable income. These actions, while reducing your tax bill, can also enhance your long-term financial security by creating new investment opportunities or providing immediate savings. Whether you're starting a new business, planning for retirement, or managing your personal finances, understanding tax-saving opportunities allows you to make better financial decisions and leverage your money more effectively.